What's up, you guys? This is Bob, and a few weeks ago I made a video about how to request mortgage forbearance. I went through the steps on it, but now, since a couple of weeks have passed, we're starting to see what actual repercussions there might be for people who are still thinking about using this, or people who are actually still in it, because there's different ways it can affect you. And for those of you who don't know, mortgage forbearance is a program that was made possible through the CARES Act to where you can stop making your mortgage payments for 3 to 6 months and not be affected, as in not be affected, meaning it won't hit your credit score. But that doesn't mean that you won't be affected, because the mortgage industry is actually finding ways to get around this, apparently. And as someone who owns their own home, and as a landlord or real estate broker, and someone who's just very active in this industry, I want to make sure that you guys actually get the facts on this. And so what I've discovered is there is really two groups of people on this issue. Group one basically believes nothing will happen. It just pushes the payments off. You'll be all good. It doesn't hit your credit score. That's the end of it. Group two thinks the entire world will end if you do this. Your credit score will be destroyed, and the chances of you actually being able to refinance your home are essentially zero. And absolutely no chance of originating a loan, at least a good loan. And not being able to refinance your home is an especially compelling issue right now, not because that's just a bad thing, but because refinance rates are at all-time lows. Like, it's never been this low. But the other side of this is, well, you need the help, and so it's worth the potential risks to your credit. And at the end of the day, it's always best to keep your own money in your own pocket during emergencies. And what if this is the very program that could stop the potential domino effect of your finances? So what's the truth? Does it affect your credit, and can you refinance your home if you do this program? I put the mortgage forbearance program under the microscope, and I used my own credit as the guinea pig. I got the forbearance.
To accept this forbearance plan, press 1.
Got it on my credit report. Then I canceled the forbearance program, checked my credit, and I requested a refi. And here's what happened. And for those of you where mortgage forbearance is a completely new idea, forbearance is a temporary postponement of mortgage payments. It is a form of repayment relief granted by the lender or creditor in lieu of forcing a property into foreclosure. And the reason why mortgage forbearance exists is not just because of the CARES Act, it's actually existed before that. The reason why mortgage forbearance exists is because if too many people are unable to pay their mortgage, then the people who are actually holding that loan, as in the people holding the bond, because people on Wall Street buy them and then actually take the income from your payments that you are making, if too many of the homes start getting deferred payments, then the value of that security, that bond, goes down. And if you remember 2008, when those security values go down, whoosh. But luckily, it is not looking like that is going to happen this time around, at least not yet. Okay, so what did I do? Well, I got the mortgage forbearance by calling my service provider.
To accept this forbearance plan, press 1.
I pressed 1 when they prompted me to, and bam, I got mortgage forbearance. But here's the thing. Easy money always has strings to it, right? Like, this is kind of a too good to be true situation. Even though I asked them 10 different ways, does this affect me in any way?
That's going to put you in the pipeline and freeze your account, basically, so your credit won't be affected. We won't assess late charges or report negative information to credit bureaus during forbearance period.
Now, even though she kept saying, no, I won't be affected in any way, turns out that isn't true. Turns out they will leave a comment on your credit report. They just kept emphasizing the credit score. How did this never come up in the call? I don't know. Maybe it's the same people that were answering the phones for the EIDL loans. Essentially people who just don't answer the questions right. But let's take a look at my credit score. Did they affect me? The answer is no. My credit score has actually been going up, and up a lot. Now, I will say that I've actually been actively working on improving my credit, and there is an upcoming video for that, but it looks like no, this does not hit your credit score. So that part is very much true. Mortgage forbearance does not hit your credit score, but it does hit your credit report, which is a different thing. And they affect you by leaving a nice little comment, and if you go up to someone to get a refi on your home or any loan, they will see this. But how much does this comment matter? Because now we're dealing with a person, not just a number. So how much will this comment actually affect you? And should I sue my service provider for essentially lying to me?
We won't assess late charges or report negative information to credit bureaus during forbearance period.
And will you guys hit the like button? Because it really helps on the YouTube algorithm, and my YouTube algorithm score is still pretty low. Okay, now to the actual refinance section of this. Now, let me tell you, I was actually getting pretty nervous with this part because I actually want to get a refi myself, because it is essentially the best stimulus that you can get right now, because this stimulus will continue to help you for years to come. And this is especially true now because the feds have made interest rates all the way down to 0%. And it looks like they're now going to be holding for a while, which is of course bringing mortgage interest rates way down. In fact, I just saw an interest for a 30-year loan at 2.99%. That's right, we have finally broken into the 2% levels. And if you're the average American holding the average mortgage amount of $309,200 at 4.1% interest rate, this saving right here is worth an absurd amount of money. And no, I'm not covering the 15-year mortgage amount because that is usually a bad investment. More on that in a different video. But if you like this video, please hit the like button. So what I did next in order to figure out if I could get the refi is I went out and I shopped for refinancing my home. But in order for me to actually apply, I had to cancel my forbearance program, and I did within the first month. I basically got the forbearance program and then canceled it, but it still showed up on my credit report. And then I paid off my mortgage like normal. And then I waited 3 business days so that the systems would update, showing that I have paid off everything and I am not in a forbearance program. And here's what my loan service provider said. Okay, so what you're saying is once the money is cleared and you know for a fact that the money went through, then we can refi and I shouldn't be affected by this program at all.
Correct. And as long as the forbearance has been canceled, because what happened is a lot of people, we were dealing with this issue all month long. They were canceling the forbearance so they could refinance, but then it would take a few days for the forbearance to clear out of the system.
So yes, I got the refi at the good rate. I didn't get a bad rate, I got the best rate. Boom. So let's summarize. Does the loan forbearance program hit your credit in any way, and does it hurt your ability to refinance or get a loan in general? And so to an extent, yes, you can still refinance your home even if you are in the forbearance program. But note that I am just one sample and one guy. And you have to understand that I actually have really good credit and I don't have any other comments on my credit report. So if you have other things going on, this might be the thing that kind of tilts you over the edge. And you have to note that I was only in the mortgage forbearance program for a month. So that comment that showed up on my report for that month would actually show up again in the next month and the other month. So I would assume that if I was like a loan officer or someone, I would judge you a whole lot more if you had way more months on there. So it's possible that if you don't have great or otherwise perfectly clean credit or credit reports, then this might actually end up affecting you. And it could affect you on different loan types, especially in more complicated loans that are dictated more by the actual loan officer than just, putting in your credit score. Now here's the opportunity that I don't think a lot of people have thought about, which is if you are actually considering getting this mortgage forbearance program, but you can make next month's payment, you're just afraid of a couple other months that you can't make it, why not just get the refi up front? Because if you do this, your payments moving forward should be notably lower. And there are programs where you don't actually put any money down. Generally, those loans are not quite as good, at least in my opinion, but it still might be better than doing the forbearance program. And what's nice is if you actually do end up getting the refi, is that next month's payment, you don't pay. You have a whole month where you don't have to pay. You have like your own little forbearance program built into getting the refi. Now, this money doesn't actually disappear. It actually just ends up getting paid at the very back end of your loan. But timing is everything right now. So that might be a really good alternative option for people who are really considering getting this forbearance. So doing that instead, I think might be one of the best ways to actually skip this mortgage forbearance. So my general consensus of whether or not you should get this or you should not get this is you really, really, really need to make this your last option. Do not get this if there is any other way that you could pay your mortgage. You really just want to pay your mortgage. This really is for people who do not have another out. So before doing this, I really suggest that you guys sit down, you make an emergency budget of what you really can and what you really cannot part with. And then looking for other programs like utility deferment programs, subscriptions, especially online-based subscriptions that you can usually not pay for a while. And there's actually a lot of car payment programs where you don't have to pay for your car for 90 days. You should look into that. And just about anything else that you can cut before you do this. And if you are an actual credit pro, as in you're in the industry, or you are just crazy read up on this and are an authority figure on it, then yes, please leave a comment below, because I know that my situation is anecdotal. It isn't perfect. I'm just kind of telling you guys what happened to me and the basic conclusions of what I can derive from it. So that's it for me, guys. I hope this really helps you. Please hit that like button if you found it valuable. So okay, guys, thanks. Bye.